So recording has started. Uh, so let me talk to you a little bit about the market. Someone sent me a question about S&P, what I think about the market. So S&P is about to break out. Another push and close above Friday's high will be bullish, another leg bullish for the market. Market is bullish, but you have to evaluate the market. What's next? Like what's next? What's next? Is it topping out, or is it going for another leg? So it's not topping out. It's going for another leg higher. So Monday, if S&P closes 3-4 points above the Friday close, the Friday close is 25.1936. It's another breakout. If you look at S&P chart, it already put a breakout on Friday, but sometimes breakout fails, so you have to wait. But also when the market is breaking out or reaching a new level, or any stock, you have to see, is it making a new high, limping, like a limping way. One leg is broken and it looks like as if it's trying to reach that destination and it's tired, or is it just running fast? There's a wall. Imagine there's a big wall, thick wall, and it's running up and it's hitting the wall, and the wall is about to collapse. So when that kind of action happens, then that's the sign that the market will go up or the stock will go up, even if it retreats. Because if it retreats, there are some sellers who just want to get out because they are not sure, so they get out at the new high. But all the others stay in the market. So when they stay in the market and the market starts moving up, so those who sold at the high, let's say on Friday, they come back and they push it. They push the market higher. So S&P is going higher. Dow Jones, you have to see all three markets. So all three major markets. So Dow Jones is going for 25,000. But then who cares about 25,000? Right now it's at 22,405. So what's the next target? So the next target is another 1,000 points. So another 1,000 points in Dow Jones. S&P is at 2519, so another 120 points. Nasdaq 100. I mentioned long time ago when Nasdaq was way below. I mentioned that it will go to 5,000. Nasdaq 100. It has crossed 5,000. Now my target is 6,250. So it's there. So the market is really bullish. And they say September is a bad month and the market crash in October. So I don't know, it can happen, some black event, but you have to go with the flow. And you need to be like Robert De Niro, my favorite actor, in one of the movie Heat. If you have seen Heat, in the movie Heat, he tells Val Kilmer, you should be ready to leave the town in 30 seconds when you spot the heat. So that's what the stock market is. You should be ready to close out your position when you see the heat. So if you have not watched the movie Heat, Robert De Niro and Val Kilmer, you watch it. It's like I watched like 10 times. Whenever they show it, I watch it. I used to have that CD. I don't have DVD. I don't have DVD anymore, so I watched many times. Okay, so that's about market. So market is bullish. Now today's agenda is I will show you some charts. I'll give you some reasoning why we enter the trade when we enter, and I think some charts for next week. and I do have another presentation is vertical spread. So the presentation is supposed to, webinar is supposed to go 35 minutes, but I take it like 1.5 hour, 1 hour, 15 minutes. So up to you if whenever you, you know, are you seeing my charts? I see my chart myself. I think you're seeing it, right? Okay, if you're not seeing it, then you can leave the message on. I think you're all seeing the chart. I mean, not the chart, the slide. Okay. So market is when you want to make money in a stocks or option, you have to know what the professionals are doing. So if you know how the professionals are making money, you just follow their style, like their style when they come in, understand what they look, and then you go with that. You follow that. So that's what it is. When the professionals are coming, so you have to identify that. So I'll go over these slides quick because I have gone through these slides before. Also, you need to master a few techniques, not all. So there are hundreds of techniques, there are hundreds of markets. I don't trade all the markets, although having a knowledge about the market little bit is okay to have. It's like when you enroll in a university in the freshman year, they teach you general courses. So you're trying to make up your mind. Like I changed my major 5 times, and I changed my career 5 times. So I may change my career again. Who knows? I get bored, so I may become someone else or something else. I may not be trading stocks. Who knows? That's my history. Past history tells me I changed my career quick. But I've been trading for 13 years. So this is the longest professional I have. So when you are in the university, change your career, right? I came to be a civil engineer, then I changed it to electrical engineer. I didn't like it. I became I got 100 out of 100 in chemistry. My professor said chemical engineering, so I changed my career to chemical engineering. I didn't like it. So I kept on changing my career. I went into IT, programming, hardcore. I didn't like it. So I realized that I'm a business minded. So I went into business major and IT consulting, etc. So same thing here in stock. You can evaluate various markets. In the beginning, just paper trade, and then you say, okay, what fits you? Then you adopt that. So for me, stock and option trading fits me. So I like that. And I prefer swing trading. So I don't care about other markets, what they are doing. All I care about the stock, what the stock is doing right now. So whatever the other market is doing, whatever effect it has on the stock, and it's happening now. And if I can read it, okay. I don't do if-then analysis. Okay, like I read, okay, if Japanese yen go up against dollar, then this will happen and this and that. So okay, if it's going to happen, it will tell me on the stock, right? So I will see it. When I see it, okay, I will act upon it. I don't have to see what's going on in other market. So another thing is you need to master a few techniques. So I try to master. I'm still learning, and every time I make a mistake, that's where I learn more. Or when I see the stock moves up in the direction I predict, so then I know, okay, next time if I see that, I will get in. This time it went by, it's okay, but next time I'm gonna get it. So, and the trick is the stock which moves fast, expecting the stock to move fast, 3 to 5%. When you combine that 3 to 5% move in the stock, option trading become 40-80% return. So that's one thing. And these are the 3 strategy. So breakout strategy, you need to know when the stock is breaking out with volume, so, or breaking down, or when the stock goes down and then hits the support, so or hits the resistance. So the strategy or the trick in the stock market to make money is identifying the support and resistance and the trend. So first you need to identify the trend. If you identify the trend, your major problem solved, right? You know the trend is going up. Now when to get in? You can get in at the wrong time. If your duration is long, you will still make money. That's why a day trader needs to be very precise. They figure out the trend, but the timing is wrong because the timing has to be perfect. So day trader lose money on timing. So if your duration is long, even if you are wrong on the timing, you will still make money. You know, stock is at 155. You were supposed to buy at 150, but you bought it at 155. The trend is up, and as long as the trend is going up, you still made money. You made money when you bought at 155. The guy who bought at 150 also made money. But if your timing is wrong and the trend is wrong and the stock changes the direction, then you will lose more than the guy who bought at 150. So identifying the trend, which is not that difficult. If you look at the chart, you can pretty much you can do. Everybody can tell the stock. If you are having problem in identifying the trend, then just look at the weekly chart. So pay attention to the weekly chart. So if the daily chart is have noise, but the weekly chart doesn't have noise because it has week to week. So if you are confused, just flip on the weekly and see the direction, and then you should be okay. Then identify the support and resistance. So identifying support and resistance is the key, and especially for breakout reversal. When the stock comes down and then it starts moving up, if you identify the support, you're good to go. So you know your stop. The third is opening range breakout. So opening range, I do that every day. In the morning, when the stocks are moving, they're moving, too many stocks are moving. Like I have 500 stocks, they are moving. So I put a timer on it. I have a timer, I put it. So I say, okay, if the stock, only show me the stock which are making new high intraday after 5 minutes. I'm not even looking at other stock, because during that 5 minute, I'm looking at the open position. So on one side, I'm looking at my open position and I'm looking at the market. And on the other side, on another monitor, my stocks are coming in on that window, which are making new high on intraday basis, 5 minutes higher and good volume. Then I say, okay, yeah, these are the stocks. I look at it. So I click on it, boom, 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 boom. I see where it is. Okay, yeah, fine. Now I memorize it, right? So I memorize out of like 15 stocks. Okay, I need to pay attention to these 3, 4, 5 stocks. They are looking good. So I know that. Then after 15 minutes, so the stock move on another screen, 15-minute chart, 15-minute interval. I say, okay, yeah, out of like 10, those 10 stocks which were moving on 5 minutes, now only five stocks left. So I need to pay attention on these 5 stocks. So I remember it. Maybe out of these 5, if one of them is already I'm in a position, then it's good for me, but I have to be careful. If it's hitting the target, then I take profit. Otherwise I say, wow, good. So it's making new 15-minute high. So let's watch this for profit taking. Then if it moves another 30 minutes, after 30-minute pass, that's where I say, okay, this is good. But if it's not looking good, then I put a timer for 60-minute interval. So I say, okay, 60-minute interval after 1 hour, because that's where all the news comes and finishes, 7:30 Pacific time. Then I take a look. So it depends on opening range breakout. Now, all these are the 4. As you know, a lot of stocks gap down and gap up. So I'm looking at those stocks which are gapping up. So there's another window where I run my gap strategy. So all the stocks which are gapping up show up, and all the stocks which are gapping down show up. So they disappear. I put opening range breakout on them, and then if they gap up and then they disappear, then they are no longer valid. But then I say, okay, if it's disappearing, is it reversing too severely? If it's reversing severely, if it hit resistance, then I may look for the puts. And if the stock gap down, then it's on a and it disappears from my gap down window, then I take a look at it, why it disappeared after gapping down. So I put it on another window and I watch it if in case there is a reversal, a strong reversal coming up. So if the strong reversal is coming up, then I buy the call. So these are the things which are happening in the early market opens. So I'm going through all that, and then I apply other techniques, which I will explain to you in the chart. So I have a $17 offer. If you're interested, just send me email. You can sign up for 2 weeks at $17, and 127 is the published price, but you will continue at 107. So please send me email if you're interested. Okay, let me open the full mode. Let me see if there is any. Let me see if there is any question which I need to answer now. So all of you can see the chart, right? The slide right now. You can see the slide. Please say yes, no, type it. So, okay. So if you don't, then you see, sometimes I need to make sure. I confirm myself, I see my own slide. So it's good to go. Okay. So here is a LB chart. So we traded LB. Now what technique I applied? We made money on L brand. So L brand, do you see this downward sloping trend line, which is acting as a support? All these tiny candles touching it, you know, so it's resting, right? So if you see this kind of move on a huge volume, boom, big volume, right? So volume climax, gap down, and then and then the stock is doing this on the sideway, dong, 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 like a ping pong, pong, pong. So what's happening? It's telling you that I don't want to go down, I will go up. So if you see this chart, you just put it on your watch list, let it sit there. The stock will tell you if you have the system. So this move, you see the stock hit this resistance line and it was coming down. So when it's coming down, it did not reach this line. So when the stock doesn't reach the downwards this slope and reverses upward like this, it's called partial decline. So this is what partial decline happened. Partial decline, and then the stock moves up. So this is telling you the stock has reversed. There is a news here. So that's where we got in and we made money. We knew that, okay, this is the resistance. So the stock broke up and we made money. So I show you what happened. You see? So 3 more continuous days up. Some people will wait for it. Oh, I need to wait for 3 days of continuous move. Well, 3 days of continuous move is too late. So it can go up. Sometimes the stock keep going because there's short covering going on, or the good news keep coming up, or the fundamental has changed. So it keeps going up, but we got out at 43 level. So this was the signal, partial decline. It did not reach this level. It reversed upward, and it reversed, continue going up. You see the opening candle opening is almost equal to the low of the day, and the high is equal to the close of the day. So when opening is close to the open of the day, high is close to close of the day, that's bullish signal. So that's a bullish sign. You don't need any indicator to tell you. Okay, NTNX, I send this chart. So to buy. So this is what happened here. This is where I spotted, and I send the alert that I'm buying shares. I sold it at 25. I gave the target to 25. So you see the stock was selling off. So when how I found out NTNX, because someone posted on a Facebook on this day. On this day, someone posted on Facebook that he bought NTNX. So I said, okay, let me see NTNX. So I put it on my window. So I say, oh yeah, let me, if it goes up, then I'll buy. But then next day when I was market open, NTNX, I saw red. So I said, what's happening? So I said, okay, now it's going down. Then after 10, 15 minutes later, I look at it, I said, no, now it's going up. So I said, okay, this is something is going with this stock. So I will put the alert to buy. So this is the long, because this candle. So my stop is below this candle. So I sent alert. I said I'm buying NTNX. So I bought some shares, and see, the stock trended down, but it did not break the low of this. The low of this, it held, right? So it's just partial, just a pullback, and then boom, 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 boom. See, 25. It hit 25. I got out. So it may be going here. I did not look at NTNX after I sold. Sometimes I don't look after I sell. Yeah, you see, perfect. I don't have a chart. I send the alert, it sell it near 25. After it hit 25, it has gone back to 21.70. So another classic exit and caught the move. So when you see this, why the stock is running down and then running up, so you just buy it and put your stop here. There's no indicator needed. NVDA. So NVDA is following this channel. So if you look, this is the channel. It's holding 175. There's a 50-day moving average. So it's NVDA is bullish, and I'm long on NVDA. And NVDA is going up. So this is the NVDA chart. Yeah, see, NVDA is going up. Tesla. So I missed this Tesla puts here. I watched it, but I didn't get it. Now I think it's too late. So it's holding this upward trending line. It may dip below, but then it can go up. So chances are it's going up, not going down, because the 50-day moving average is there. Apple had this dramatic sell-off of phone because of iPhone. Now is going up. So Apple will go up. If you try to buy puts, you will lose money. So it's better to buy calls. I'm long Apple. So this is the chart of Apple. So Apple right now is doing this. It will go up. EFX now, yeah. So one of my members sent me email on EFX right here. This candle, red candle. He said, "Oh, I think I'm going to buy EFX puts." So I told him, no, don't buy puts. Now it's time to buy a call. Just wait for me to send you alert. So you see, why would you buy puts right here when it has gone down from 145? So all the bearishness have happened. So now all the sellers have gone, nothing left. And look at this candle. So this is this candle itself. If you're an aggressive trader, you can buy. You could have bought this at near the close, knowing that okay, this is a long hammer. But then I said no, I need to wait. So I waited, and 98. It's an alert. I posted on the Facebook also that EFX is long, and then so bought shares, sent alert. I didn't buy calls. They spread wide. But then later I bought calls and made some modest money, send the alert on modest money on this candle. So on this candle, CEO resigned. So that was the news. So then it moved to 106, so I sold it, send the alert. Yeah, here, you see this. So now it's not doing much because it may go up, but it's just doing this kind. When it's doing like this, then I say, okay, I get out. Because I'm a swing trader, right? So swing trading, I just want a quick move. Don't want to hold forever. Oracle, so the Oracle, it seems after gapping down, one member, his name is David. So on Oracle on the earning day, he sent me email, said, what do you think of Oracle? So I told him Oracle will, chances are that Oracle will come down, then go up on earning. I did not buy puts myself. Then earning announcement after hours, it went up, it was trading up, like dollar or something after hours. So I said, damn. Uh, but then when the market opened, this is what happened. Now it's consolidating. So I'm watching Oracle for calls. So if it starts moving up, I know already, right, that where 47 is my stop. So I buy calls on Oracle. So there's no time, unless there's some very major bearish news, the chances are the Oracle will go up, then go down. RCL, I think CCL, when CCL announced earning, both RCL and CCL came on my gap up scan. So I bought calls on RCL. So, you know, based on this trend line, and I bought the calls. And the reason I bought the call, because if CCL is also moving and RCL also moving, then that's two stocks in the same category moving good. I bought the calls. The chances, so I always look at what are the chances of me losing money than making money. The chances are I'll make money than lose, because I see this. So buy calls. So I bought the calls. Then it did nothing. It went on the sideway. So it's still holding, you see. It's still holding, but it's going up. So one leg up and I will get out. IBM is very slow in moving. It's going to 50 to fill this gap. So I'm looking for 150 and I will exit when it fills the gap. So I'm just holding IBM. This is Micron. So Micron we traded and we got out early, and then the earning. So earning gap up. I think this is earning gap up. You see this above the resistance. So this gap up is bullish. So above this resistance line, it gapped up, and then now it keeps going up. So it's going higher. So someone asked me last Sunday, what do you think about MUS? I told webinar, it's going up. So it's going up. You see this? So when the stock do this, and then it does, it's bullish. It's breaking out, broke out. So MU is bullish. Maybe it's going to 50. This McDonald is not doing much. I have calls and it's just resting right now. So I expect McDonald to go up. It's not breaking this 152 level. So AAL, now I bought calls on AAL. I was seeing AAL, DAL, UAL, they were all moving up, but then I saw this out of all the airline stock, which one is the best one looking right now? So AAL looked good to me, and I took the screenshot. So this is the candle AAL put on, I think Friday. This is the Friday or Thursday. So AAL looks like going up. So when I see this bullish candle where open and low is same and high and close same, then you need to buy calls. Chances are it's going up then going down. Baidu, we traded Baidu. So it was consolidating on at the high of 242, and I think there was a news, some news from China, so it sold off to 231, then it reversed and target was 250, it hit 248. So it was doing this holding this trend line and bumping its head on resistance. So any breakout is bullish. So on this white space, so I bought the calls, sold it. Yeah, you see it's moving to 244, then it went to like 240, 248. So I sold it between 247 and 248. Yes, right here I sold. You see how it moved? So let me show you. So this is what it was doing. Then it did this. Boom. Cross. So 248 I sold. I was up to $300 per contract. This is ABBV. So I took this screenshot. It gapped up and hit this resistance line. So I try to see what it will do on Monday. So if it continues going up, then I'll buy. Otherwise, just ignore it. This is Wynn Resort. We bought calls here. Around here, when I saw this candle, I bought the calls, send the alert. and I waited for this trend line to break. So when it broke, I sold. So there are two things: the trend line break, you sell or hold, or what you do. If you're holding a position, I sell. I sell. I sold on Friday. I think I sold when it broke this line. I can always buy if it close, come down this area, I'll buy again. Otherwise, I sold. Yeah, I sold here between 149 and 150. This is AKM. I bought calls on AKM, so this looks bullish to me. So if this is the trend line, you see, it's holding 50-day moving average. So I said, okay, it's holding 50-day moving average, and this is the candle early morning, like right at open. So let me see the time. You see 10:06 a.m. Pacific. So 30-minute breakout, opening range, and I bought the calls on it. So right around 10 Pacific, I bought calls and took the screenshot. And this is what it is. So I expect AKM to move. And I also put on a debit vertical call strategy. Spread trade, I'll explain to you in case you don't know what it is. eBay, I took the screenshot. I don't have any position on eBay except I have futures. So this is what eBay is doing. You again is look at the candle and look at this time, 10:27. So when it did the opening range around 10 o'clock, I was watching it, and then I said, okay, I'm gonna buy eBay because look at this candle. So I mean, looks like it's going up to me. It covered in one shot. It covered all these candles. So chances are high that it's going up than going down. That's, I asked, what are my chances? So VRX, I bought VRX. So based on this trend, so I expect VRX to go up. So anywhere here, 1550, I'll sell VRX calls. So we'll make 40-50%. CRM, I made another chart. CRM is holding this 50-day moving average, so I'm watching it. So if I see a move, then because I have seen the chart already, so if I see the move, if it comes in my early morning scan, then I know that it's going up, so I'll buy calls. And regarding opening range breakout, you have to, you can do it manually, 5-minute something manually, but I have automated it. So on TradeStation, I automated it. So it's set the time, 5-minute, 15-minute, 30-minute. So it's automated. My life is automated. I have a coaching program, 6 months. So if you're interested, you can send me email and book the strategy session. We'll talk about it for 40 minutes, and then you decide if you like the program or not. I have a 2-week offer for $17. If you're interested, please send me email at noshi@financialmarketswizard.com. I'll send you the PayPal link. Okay, so done. No, we don't discuss position sizing. Sorry, I didn't change. We'll discuss vertical spread. So vertical bull spread. So if you want to stay, you can stay. Let me explain this. I make a lot of money via this strategy. This is another service I have, and I make money. So vertical bull spread, what is vertical bull spread? And there's vertical bear spread. So it is simultaneously buying one option and selling another option with different terms on the same stock. So you buy one option and then you sell another option. So I'll explain the process. So you create the spread. So the objectives of a spread trade are two. You want to reduce the risk. So one objective. Another objective is to lock unrealized gains in existing trade. So you want to lock some gains in the existing trade, but you want to keep some. So you say, okay, the trend is up, the stock is going to go up more, so let me take some profit and ride it up via spread. So that's the objective. So let's explain the characteristics of vertical bull spread. So for vertical bull spread, the market outlook is moderately bullish. So when the stock is moderately bullish, if the stock is bullish, super bullish, then you know that the stock will go up quickly, then you will buy straight calls, long calls, or you won't put the spread. Or when I figure out that the stock is going to this target, which is huge, but it may not go like fast. So in order to capture the gain, I put the spread. So if the stock is suppose at 150 and I see it going to 160, but it's not going straight 10 points. So there is a 10-point difference in between existing price and the target. So I'll put the spread and let it ride, let the stock ride, do its thing, and eventually go to the target 160. Recent trade we put is UTX. So when the UTX fell down because they bought Rockwell, another company in their sector, it went down. If you look at it, then it reversed. So when it was reversing, like 10 days ago, I sent alert to buy calls, and we sold it at 114. We bought it at 111. But then on a spread trade, because I know UTX, if it has bottom, it will go much higher, 115 and above. So I sent the spread trade. So a wide spread. So the wider the spread, the risk is higher, but you capture a lot of gain. So so we are in riding the maximum gain. So it's trading at 116 right now, and our short strike is 115. So 110, 115, 5-point maximum gain. So we capturing that. So let it ride all the way. We have November expiry. So we limit the risk, but we have a limited profit. So when you limit the risk, you have a limited profit. So you already know your profit potential. But I'll tell you or show you the way I make more gains than the limited, what's the initial profit I expect, because I'm already in the trade. So it's in my basket. I know what it's doing. So from time to time I buy straight calls, I buy some shares, so I combine things. I buy more, I put, create another spread, so different things, because I know, okay, yeah, it's doing the thing what it's supposed to do, what I expect to do. So I keep on milking that stock. So two types of spread. There's a bull spread and there's bear spread. So I'll talk to you about bull spread. So in bull spread or in bear spread, there are three kinds of spread. So vertical bull spread, horizontal bull spread, and diagonal. Today we'll only talk about one, vertical bull spread. If you understand one, you will understand all three. So vertical bull spread is where expiration date is same. So both your long calls and your short call, the expiration date is same. So if you buy long calls for November, your short call is also for November. The strike price is different. Your long call strike can be 110 and your short strike has to be above. It's 115, 120, etc. So strike price are different in vertical bull spread. And this is what I do. In horizontal bull spread, the expiration date are different, but the strike price is same. So expiration date is, let's say it's long call is October and the short is November. So expiration date is different, but the strike is same. So strike is 40 for long and strike is 40 for short also. So one is a shorter duration, one is a longer duration. So you're just collecting the premium. So you know that, okay, by October, if it's only 2 weeks, 1 week left, by October, the stock will not go above this strike price. It will go maybe later in future, but not in 1 week. So you're taking that chance. Diagonal bull spread, both are different. Expiration date is different and strike price are different. Okay, so this is the scenario of vertical bullish spread. So the scenario is, as we discussed, it's moderately bullish. So if it's super bullish, then you just buy long calls, or you want to capture um, long gains. Usually I put the spread trade on the stock where the trend has just changed. So when the trend has just changed, the stock, most of the time, even though the trend has changed or the sentiment has changed, the stock doesn't just start moving like crazy and going up. Very few stocks do that, but most of the time the stock, when the sentiment change or something fundamentally happening, the technically the stock has changed the trend, it goes up, but it's waiting for the news, more news to come. So when the news, more positive news will come, the stock will take another leg up. Then another something news will come, then leg up. Some bad news come, the stock is not going down, they ignore the bad news, then it goes up. So it is stair step, the stock is going up. So if the stock is going up, if even if the time value is you're losing time value, it's okay, you're losing the time value on both sides, long side and short side. So short side is losing more time, so it's benefit for you. So let the stock do its thing, but you have to be sure that the trend has changed. So the outlook is moderately bullish, and let's say the stock is XYZ and the current price is 101 and target price is 111, and the current month is November. So let's say we are in the month of November. So what do you do when you buy call, put on the spread? So you say buy to open, January 100 call at $5. So this is normal, right? Just like you do for a long trade. Buy to open, January 100 call at $5. Then you put another trade, which is sell to open, January 110 call at $2. So when you sell, you get the money back. So you pay $5 and then you get back $2. Now your net debit is $3. So your investment on the trade is $300. So you reduce your risk. Instead of your maximum risk of 500, your maximum risk now is 300. But you have reduced the profit potential. So what's the formula? There is a formula for calculating the maximum profit. It's the difference in the strike price minus net debit of spread. So the strike price difference is 110 minus 100. You bought 100 call and short 110. So 110 minus 110 and then minus 3, $700. So that's your profit potential, $700. Later I'll show you by a graph also. I'll prepare the graph to show you the graph. So if you invest 300 and you make 700, that's the percentage gain of 233.33. But for this gain to happen, you have to wait till the expiry date. Sometimes the stock just keep going up and it goes beyond your short strike. So if suppose short strike is 110 and the stock is like 120, 125, so chances are that it will come down below 110 is minor. So you let it go all the way to expiry. When the expired, your short strike will it's 110 and your long is 100. When you on expiry, when they close, you will make 233. But I never wait for the all the way to the date of expiry. I close lot earlier, so my profit potential will be less because I'm closing lot earlier, because I don't want to take chance. Something can happen and the stock can gap down and then I will give all the gain, or I may have another trade, so I need to free up the capital. So if I put 110 strike short, if the stock is trading at 112 or 113, I will close it, because that's, it's better to have 175% now than 233% after 3 weeks or 4 weeks, or I may have like 40% or 0%. So it's better that I take now and move on. So calculating the break-even point, you can calculate your break-even point when you put in the debit spread, lower strike price plus net debit of spread. So break-even point is lower strike price. So lower strike was 100, which is your long strike, and you gave $3 as your cost. So as long as the stock stays 103 and above, you will break even on the trade. So you know where is your break even. Anything below 103, you will lose money on this. So points to consider. So these are the things you need to consider. The first trade you need to do is buy to open, and then the second trade is sell to open. So sometimes I get the email saying it's not working, what's wrong? So what they're doing is they're putting the second trade first, the second leg of the trade, sell to open. So sell to open is a short, is a naked call. So if you're not allowed by the broker, you won't be able to sell. If you don't have anything, how you will sell to open? You cannot sell. So buy to open and then sell to open. Both trades are open trades. So there's nothing to close. So you're not closing any trade right now. Buy to open, sell to open. Both trades are open trades. You can put the trade execute as a basket. So sometimes because you sell, you're buying it at ask. Always you face the worst price, because the market maker gets the best price. You get the worst price. So when you're buying at ask, not the bid price. When you're selling it, you're selling it at bid. So sometimes there is a let's say there is a, because when you're buying it, you're buying the strike, suppose in the money, it has a better spread. So suppose it's ask is 4 and the bid is at 370. So you may able to buy at 390. So you shave the 10 cents. But the short one, the sell to open, because you're selling at bid. So if the ask is at $2 and bid could be like 140, so there is a 60-cent spread. So that's not good. You will get 140. So you're incurring more. So you want to sell at like 180, right? So you can do that, buy first and then sell. But what if you are unable to sell? You will incur, you have to sell at lower price, like 170, then 160. But you can create a basket, and then you say, okay, I want to pay net $3. I don't care if you give ask is this or bid is this, just I will pay net $3. So whenever the basket is 3, you will be executed. So you can do that. So when you're closing it, first you need to close what you first you need to buy what you sold. So you sold 110 call, you need to buy. So suppose the stock moved up and you bought it way below like $2. So I mean you sold it at 2, you have to buy at $6. So this is what you need to do. You buy to close January 110 call at $6. But your second step, closing the long strike, sell to close January 100 call, this is even higher at $12. So this one will be sell to close. Before was buy to close. The long leg is sell to close. So when you sell to close, you got $12, and when you bought for 6. So your net proceed is $6. You paid $3 in the beginning when you put the trade, and you got 6 proceed. So your percentage gain is $100, 100%. So 100% gain, you sold it early. If you wait all the way to expiry, your gain will be 233%. So you can decide whether to close or to hold for higher gains. So what to do in vertical spread trade? A spread order should be executed as a basket. So as a basket means you can put the trade together, buy to open and sell to open, or execute it right away. So when you're putting the trade, you have to see both options at the same time. Don't buy a long call and then look at the short side and then you'd say, oh, There is no short side, it's too wide, the spread is too wide, there's no open interest, or it's some ridiculous spread, so you cannot put the spread trade, right? So not good. So you have to evaluate both. Can I get the price what it's saying, even if you execute separately? Even if you execute the leg separately, will you be able to get it? If yes, okay, then you execute the trade. So and then don't delay it. Don't say, okay, I'm buying long call, then I will take care of the short later. So that's, you are not following the strategy, because the stock can get away from you. Suppose the stock moves up, then your long call will move up, but the short also moving up in price. So you will be selling at sell to open. So you will get, it won't work in your favor. So you need to execute the same time, or the stock goes against you. If the stock goes against you, then when the stock goes against you, then you're getting the bid at lower price. That's what happened. Long and short strike should be closed simultaneously. So first you close the short, and then you close the long. So when you're closing the trade, you know what's the bid and what's the ask, and you close it. So you always buy at ask and you close it at bid. So in other words, you have to do simultaneously. Now there are other ways when you convert the spread into straight calls. If the trade goes against you, you can do that. So I'll explain. So type of account, you need a margin account, not the cash account. There is a minimum equity requirement, there is a maintenance requirement, and you need to check with the broker. It's like $2,000. So you need to check with the broker what is the maintenance requirement. Minimum equity requirement is usually $2,000, and it varies from broker to broker. But you need a margin account. So how to maximize gains in vertical bull spread? You need to know your support. So if you know the support, suppose after you put the vertical bull spread and the stock goes against you, if you know that this is a solid support, you may be closing out the short strike because it lost a lot of value. Now you sold it at 2, and now it's like, suppose 20 cents, 30 cents. So you close it. You don't need to wait further. So you close the short strike. So I always put a order to close the short strike in case something happens, the stock reverses on me and this option is trading at 15, 20 cents, I close it. Why take risk for another? The maximum it can go down is zero price, right? And it's trading at 20 cents, so close it. You need to know the resistance level, you need to know the target. So if you are putting the trade, spread trade, you have to know, you have to strategically select the short strike based on the target, where the stock is going. In case of UTX, when we put the trade, it was at 111. So I say, okay, it can go to 118. So I can buy the, I could have sold the short strike at 120, but I sold it 115. If I sold at 120, it's more aggressive, so it needs to move further. So I said, no, I'll take 115. So knowing the target, then you select the short strike. So you have to know that. Closing the short leg at support. So if the stock goes down and it's reversing after hitting the support, and the short leg has lost a lot of value, you may close it. Then you can double down on your long side. So you can do that because you close the short leg, you gain the profit from the short side. Now you can put that money on the long side. So basically you converted your spread into straight calls. And you can buy on the side, you can buy additional long calls instead of, besides having the spread. You can buy shares when the stock is going up. You see the stock going up, you have a spread trade going, you see it's moving up, you can buy shares based on your account, like 100 shares, 200, 1,000. So you can do that. There are 3 kinds of vertical spread, so I won't go, I mean, I need to, if you really want to know, then you have to go through the details. But there are 3 kinds: conservative spread, aggressive spread, and extremely aggressive. I do this aggressive spread. So the more aggressive you put on, the more money you make, but chances of losing money is higher. conservative, you make less, but chances of losing is less. So I go middle of the road, aggressive, where I know I can lose this, but I will make this middle of the road. So aggressive is spread I trade. It depends. Your aggressiveness comes from the strikes, what strikes you're choosing. So I have this trade in service also is 37 for the first month. You can try it. Second month is 57. Published price is 77. So if you're interested, please send me email. You know how to contact me, and I will send you the link, PayPal link, and you can join. It's only 37, and it only takes 10 minutes, like 5 minutes, 10 minutes. If you don't have time, it's perfect for you. So you just once a week you get 1 or 2 trades. That's it, no more, because it takes time to mature. But when it matures, you get 100% gain. If you're busy, this is the only 5 minutes, 10 minutes. You just read one of my email and act upon it, or you can act later when because the trade is expected not to move fast. If it's moving fast, then I send that trade to swing trading. I don't send it to vertical. Or if the potential is high, then I send it to the spread service. And I have a coaching program for 6 months. If you're interested, you can send me email and we will talk for 40 minutes. It's a 6-month program, and there's a lot of material in it, like tons of material. My designers are working on it. I'm spending a lot of money on designing the course, like crazy, because I want to put a lot of material. So it's under development, and it will start soon. And like crazy material in the course. All right, so it's done. Let me see if you have any question. So I answer, how do I sign up for the first month? John, I'll send you the PayPal link. Somebody said that is way too dangerous. I don't know what is dangerous. Everything is dangerous. I don't know what's dangerous. Okay. Do you set up a watch list and use certain scan parameters? Yeah, I have a watch list. So I have 500 stocks, and I go through, becomes 100. Then when the market opens, then I look at it, and there are parameters and things. So there are. So let me see. What time frames? So time frames for opening range is I start with 5, then 15, then 30, and then finally I set it for 1 hour. So anything moving above 1 hour, I say, okay, here it is. So 5, 15, 30, and then on the side is 1 hour. So I don't have any other questions. So let me see if new questions coming or not. How do you, what's the question? How do you debit spread compared to bear? I don't put bear call spread. I just do bull or bear put spread. So which service has the spread trade? There is a vertical spread service. It's not on the website. My website is under redesign for a long time. So if you're interested, I'll send you the link. So Julius, I'll send you the link for PayPal link so you can join. I don't know, Paul, what is you saying that is way too dangerous? So you didn't tell me what is dangerous. The stock trading is really dangerous. Yes, I know that. Every day, every day you market open and boom, the bullets start flying, and there's one stock is going up, one is going down, and this and that. So it's like crazy thing, right? So I don't have a TOS. So I don't. I have a trade session. John, you are too busy asking me questions. Okay, thank you. So I don't have any more questions, I think. Thank you. Bye. If you have a question, you can send me email. Thank you. Bye.